Whether it's your first home, second home, third, fourth or fifth investment, buying a property can always be a challenge when it comes to budgeting, working out exactly how much deposit you need and how much you're able to borrow. Today I want to run through 5 potentially hidden costs that you may not have accounted for when working out your budget. Today we're talking about 5 different things that you may not have accounted for when budgeting to buy a property. Now, some of these things can be included into the loan, so essentially added to the loan and you'll pay them off over the loan period. And some of these costs are needed to be paid up front, so you will need them in addition to your deposit, be that a 10% deposit, 20% deposit, etc. Now the first cost is definitely the biggest, and this is stamp duty. Now, if you're a first home buyer, depending on the price point you're buying in, you may get a discount in the stamp duty, or you may not have to pay stamp duty at all. Where if you're an investor buying a property, depending on the price point and depending on the state, as each state does have different stamp duty amounts, will depend on how much you will have to pay. As a general rule in Queensland, as an investment property, you're paying around 3% of the purchase price. As an owner-occupier, unless, like I said, it's your first home, if you are buying a second, third or fourth home, you might have moved a couple of times, then stamp duty as a general guide is around 1.5%. As you move up through the price brackets and buy a more expensive home, once you're looking in the $1 million or a $2 million mark, you will start to pay a higher percentage in stamp duty. But for the median price across Queensland, and especially here in Cairns, you can budget around that 1.5% for stamp duty. Now, what does this work out to be? So, as an investment, if you're buying a $400,000 home and you're paying around 3% stamp duty, you're essentially going to pay around $12,000. Now, you will need these funds in addition to your deposit. So, if you do have a 10% deposit, you will need that other 3% there to cover your stamp duty. As an owner-occupier, if you are buying a property for yourself to live in, the stamp duty is a little bit cheaper, around 1.5% here in Queensland for the median sort of price point. So on a $400,000 purchase, you're looking at around $5,000 in stamp duty. So that is quite a big sum of money, and it's something you really need to take into account when budgeting for a purchase. The second biggest expense that you're likely to incur is insurance. From the moment that you sign a contract, it is recommended that you take out insurance on that property even before you own it. So that is during the contract period, that 30 or 45 day window from when you've signed the contract to when settlement actually incurs, it is strongly recommended that you take out insurance. Now, once again, this is an upfront cost. It can't be included into the home loan. And depending on where you're buying and what sort of property you're buying, it could be anywhere from $1,000 on the low end up to $5,000 or $6,000 on the high end. Depending on what areas, flood areas, cyclone areas, the risk of the property, the type of the property will really impact on the cost of the insurance. And really shop around on this one, as insurance prices can drastically vary from one company to the next. But you really do need to be allowing between $1,000 to $5,000 when you're factoring in your costings. So have a look at insurance. And I do recommend looking at insurance before actually even offering on a property, as it will really help dictate what you can and can't afford. The third potentially hidden sort of cost is your council rates. Now, council rates are paid pro rata at settlement. So what this means is if we're halfway through the billing cycle for your council rates, you'll pay half the amount due for rates. So in Cairns here, we pay around $1,300 per half year for our rates notice. So if you're halfway through that billing cycle when the property settles, you'll need to pay $650 at settlement towards the council rates. Now, if you're right at the start of a billing cycle, it means that you're going to have to pay the full $1,300 at settlement. So that's just something else that you really need to be accounting for when working out your budget. The fourth big cost is solicitor fees. Now, depending on whether you're buying a unit or a house will depend on what searches are required, but generally speaking, you're going to be looking at paying around $1,300 for a solicitor, up to around $1,600. So that's another cost that you may not be aware of when first looking at buying, or if you haven't bought for a while, is factoring in those solicitor fees. So somewhere between $1,300 to $1,600 to cover the solicitor's fee and the searches involved. Now lastly is LMI, so this is lender's mortgage insurance. If you don't have your full 20% deposit, you will have to pay lender's mortgage insurance. Now, like the name suggests, it actually protects the lender and not you yourself. So it essentially allows you to buy a property without having the full 20% deposit, but you do have to pay an extra fee on top. Now, the good thing about LMI, lender's mortgage insurance, is that it can be included into the loan and then paid off over the loan term. So as much as it can be a big cost, it isn't an upfront cost. It can be factored into the loan and paid down over time. As a bit of a guide for lender's mortgage insurance, if you've only got a 10% deposit and say you're buying a property for $400,000, you'd have to pay an extra $7,000 in LMI. So that $7,000 will get tacked onto the loan. So that's a bit of a guide if you're looking at, if you've only got a $40,000 deposit and buying a $400,000 home. Now, depending on what ratio you are, depending on the price of the property, depending on the state, will impact the lender's mortgage insurance. So best to speak to a broker about that one. And there is some pros and cons to buying sooner with a less deposit, or saving up and spending a little bit more on your deposit, as to if that's an advantage or not. So I'll run through a full video on lender's mortgage insurance another time and really dive deep into that subject. So there you have it. That's 5 different things that you really need to consider when buying a property, as they will affect the amount of money that you need to put forward as a deposit and how much money you need to actually move forward with the settlement of that property. Now, as a general rule of thumb, if you are looking at buying a place to live in, so your primary place of residency, you really want to allow around 3% of the purchase price to cover those extra sort of hidden costs. And if you're buying an investment, you really need to allow 5% of the purchase price to cover your stamp duty and the things that I've just discussed. Now, I hope this helps you, and I hope it helps you if you are looking at budgeting and buying that next property, just how much money you do need to put towards it. Thanks for tuning in, guys, and if you have enjoyed this video, make sure you give it a like and make sure you subscribe. We love bringing out videos on this channel and can't wait to talk to you soon.
Thank you.